So I'll just go through the how we have structured this webinar. So first of all, Pratik and I shall introduce ourselves. We'll talk a bit about Giraffe, who we are and what we do, and what has been our journey so far. Post that, we will, since the today's topic is to understand different products. So one by one, Pratik and I will be talking to each other, and we will try to make it a more interactive session. And both of us will ask the questions as a spokesperson for you guys. And I think that should get over between 15 to 20 minutes. Uh, Once we are done, we will open for Q&A. You can type in your question in Q&A, and we will take them one by one, and we will try to answer to the best of our capability. So let's start, Pratik.
Yeah, thank you, Vikas. Essentially, Giraffe is a platform for fixed income products. And that means that we have opportunities for all of you to invest and participate in products which give yields between 8 to 20% in the 30-day to 3-year tenor. What that means is that a lot of you would be investing in fixed deposits, in gold, in real estate, and in mutual funds. Now, today, gold, real estate, fixed deposits are all below 8%. And effectively, then you're subject to market risk for wealth creation, which is 15%, but is subject to the volatility of how the stock markets perform. And there is this whole asset class, which is essentially credit risk or debt based, that a lot of us are unable to access, because typically to participate there, you needed larger check size, typically 1 crore and above, to participate in any opportunity. That is the space that we are bringing to all of you and saying that, look, we will open it up. We will, our team, as displayed on the slide, is working hard to bring high quality opportunities, and then hopefully you will like them and judge it on the platform, and then try to decide whether you would like to participate on them or not. And each of you can decide whether you like a 30-day or a 3-year tenor, whether you like a safe asset at 8%, or whether you like a 12%, or whether you are really looking at 15% and beyond, and are able to take on some risk. But the endeavor of Giraffe is to have that platform where you can create a fixed income portfolio within these parameters that we have defined, 8 to 20% and 30-day to 3-year, allowing yourself to have other wealth creating avenues apart from the stock markets. Now, who are the people behind Giraffe? Our founders are Saurav Ghosh and Vineet Agarwal. Saurav is an engineer from BITS Pilani, Goa, then IIM Ahmedabad, and then spent 10 years in corporate finance, largely raising structured debt in all forms, whether that's straight debt or whether that's mezzanine or structured credit from both domestic and international institutions. Vineet began his career at Axis Corporate Banking and then joined Piramal Fund in the early days and grew that book from about 50 million to 8 billion along with the team. He was managing their South India portfolio of about $1 billion on his own. So he was the one deploying capital. My own background is also, I'm an engineer from NIT Surathkal, then I'm Ahmedabad, then I was an investment banker with Royal Bank of Scotland in Hong Kong. Then I was with their team of capital allocation and portfolio management that used to look after the bank's balance sheet from a return on equity and from a risk standpoint. So a couple of years with the bank, then I tried my hand at Indian Civil Services, good or bad, that didn't happen. Came back and joined a private equity fund. We used to invest in logistics and financial services. Our largest investment in India is a company called Rent Alpha, which is one of the leading players in leasing in India. And then from 2016 to 21, I was with an early stage fund, putting seed stage checks in fairly early stage startups. Vikas, if you could also introduce yourself.
Yeah, thanks, Pratik. So I had the investments at Giraffe, and prior to joining Giraffe, I was working with Kotak Mahindra Bank. I was heading their northern region for banking and financial institution group. So I've been a corporate banker all my life, and it's a pleasure to learn every day. And I did my engineering from IIT Kharagpur and MBA from IIM Lucknow. So that's a brief about myself.
So some of the other team members that you see on the slide, JP, Jayaprakash, and Ankit are also on the investment committee of Giraffe, and they have significant years of experience in financial services. Even our tech team, Apurv and Vasu, have some experience in the finance world. So the endeavor has been that all of us have come together with a combined experience of 100 plus years in the financial services space, trying to create Giraffe as a platform. Srini and Naveen have been very valuable advisors to us. They've guided us from day one. Both of them come with another rich amount of experience, both in corporate finance as well as in private equity. Srini was actually working with Saurav during his corporate finance days, and Naveen was working with Vineet in his private equity and then Piramal days. We've raised a little bit of funding from Axel Partners, which we think is a little bit of validation to our idea and to our objective. We also have some of India's experienced entrepreneurs backing us, namely Siddharth Shah of Pharmacy and Ramakant Sharma of LiveSpace and Prashant Singh of MedLife. So some of these well-known entrepreneurs have also supported us during our journey. As I briefly shared, what is the need for a platform like Giraffe? Essentially, if you have to participate in debt or debt-based products, you need someone who can bring together these opportunities and originate them in a manner which then becomes a process that if they have gone through a Giraffe investment committee, there is some amount of due diligence that would have been done. There is some amount of hard work that would have been done with the borrower to put together data, to understand it, to then have a stamp from Giraffe saying this is an opportunity worthy of your consideration. Whether you participate or not, that's a different matter, but it would have gone through a process where certain basics would have been set right, certain basics would have been validated, and only then an opportunity presented to you. A lot of this work previously was done by banks, and then it was only consumed in institutions. Then it was done a little bit by wealth managers, and then it was only the privilege of the ultra rich. What we are trying to do is, by our team, trying to curate such opportunities and make them more widely accessible. The work, of course, doesn't stop at bringing opportunities. We have to ensure that these are constantly monitored so that you get your repayments on time, whether that's monthly, quarterly, or whether that's at the end of the tenor. That's, of course, described when any of you choose to participate through the platform. What we are also doing is that some of our papers would be rated, some of them would be unrated, but all of them, as I said, would have gone through the process that we have, which is about a 2.5 month process to bring together any borrower and host them onto the platform. Vikas, if you'd like to add anything on this slide.
No, you're doing good, Prateek.
I think what we also endeavor to do, which is the right side of it, that to you as investors, what you get is a choice of products. What you also get is reasonable transparency on data, where you can understand what the opportunity is about. You can read through and then make up your mind whether you would like to participate or not. And hopefully, as I said at the start, that if you continue to participate in a spate of opportunities that we bring together, at the end of the day, you will have a well-diversified fixed income portfolio, which would then give you the power of compounding and reasonable returns over a period of time. When I talk about reasonable, they are again between 10 to 15%, subject, of course, to if you have created a portfolio, again, having some assets in the 8% basket, some assets in the 15 plus basket, and of course, in the middle. What's our track record till date? So apart from raising money, we have now been, we've just completed 12 months in operation. We began in September last year. We have done 550 crores of transaction volume till date. What that means is that all opportunities that we put together on Giraffe, the total volume of that is 550 crores, which means this is the amount of opportunities that we have put up onto the platform, as well as the participation of investors that the platform has seen. Out of this 550 crores, 240 crores have already been returned to investors. So their tenors have either been complete, some of them might have been prepaid. All of those capital has been returned back to people who participated. We have so far had 0 delays or defaults. So that's one number missing on the slide, but I can appreciate that that would be a critical data. And rest 310 crores odd is still invested, and the repayments are running on time. Now, whether that's their schedule in 30 days or 60 days, or as that opportunity might be, that's well in check. Our team at the moment is 55 people. We are largely based in Bangalore. In case any of you are joining from Bangalore, we'll be happy to meet you. We'll be happy to host you at our office and, of course, answer any of your questions. But that's just a quick snapshot of where Giraffe is at this moment. I think this is a slide where we want to give you a little more idea on the kind of opportunities and the kind of products that we delve in, and the kind of opportunities that we bring to our audience. Vikas, now might be a good time for you to take them through your experience on what are the opportunities that we bring to them.
Thanks, Prateek. So as you can see, we have divided our product offering into four main buckets. It's corporate debt, invoice discounted, leasing, and venture debt. So we are the only platform which have shown the ability to bring the diversified products on the platform. So there are many other platforms which would offer only corporate debt or invoice discounting or a combination of both. But as far as we know, there's none of a platform which offers all the across the spectrum. So the idea is that the investor should not be constrained to one product. He should be able to deploy the funds as per his needs and as per his credit appetite. So each of these products are different in the tenor and the risk. So the endeavor of ours of today is to explain you the nuances of each and every product. So I'll start what we will do. I'll take corporate debt and invoice discounting because I've been an ex-banker, and Pratik would be taking leasing and venture debt. That's where his experience comes in handy. So I'll tell you, corporate debt is nothing but a simple vanilla. So whenever you go to a lending institution, it gives you debt. So you can give debt in two forms, mainly in two forms. One is the loan, or one is in the form of bonds. So loans are not tradable, but bonds are tradable. So bonds technically are known as debentures. So there's a slight technical difference, but for our consumption, we'll take bonds and debentures as well. So this is what we call as corporate debt. So these are the papers which fall under the Companies Act, and these can be traded easily. So that's what is corporate debt. So these could be secured or unsecured. These could be security on the hard asset like car, land, property, or it could be intangible like receivables in case of NBFC. The typical tenor is for the NCDs is 12 to 36 months. It could be more, but since as per our credit criteria, we try to stick to 24 to 36 months only. And in general, it's more than 12 plus months only. For 12 months less, there is another instrument which is called commercial paper, which is regulated by RBI. So you would see for less than 12 months, you will see a paper called commercial paper. But that one important difference is it is unsecured. And the product yield ranges from, it can go as low as 5% and it can go as high as 18%. But our endeavor to be in mid of the spectrum from 10 to 15, 16%. And we have already brought a couple of opportunities, rather more than that, of Vadva Group and Home Credit. Vadva Group was our first NCD, and it has been fully repaid, and it got repaid within 6 months. The project did much better than we had envisaged. So we had done the paper for 2 years, but it got repaid in 6 months. So that sort of credit underwriting we do. Home Credit is again, which is a large NBFC. It's present in 7 countries. It's there since 97. The people hear a lot of BNPL today. A lot of NBFCs coming up with the buy now pay later. So this is the company which started it in 97 across 7 continents and has perfected this model. And they have been in India for 10 years. So we did a tranche with them in February. 40% capital has already been returned. And another 60% will be returned within next 7 to 8 months. So that's about corporate debt. So I'll take a pause and Pratik, anything that I have missed you want to highlight?
I think just a couple of points that on corporate debt, what Giraffe offers is that we have, as Vikas mentioned, commercial paper, which is less than 12 month, which is one form of corporate debt. We have then corporate debt to financial institutions, NBFCs, which will be typically in the 12 to 36 month bracket. And what you see on the screen, Vadva Group is actually debt to corporates for which might be maybe project or which might be just debt for their usual expenses. So that then falls typically between 12 to 16%. In all of these cases, we analyze the company's balance sheet and financial figures as any lender would before sort of saying that this opportunity is fit for the platform. Maybe because you can also give a quick snapshot of maybe top 2 or 3 things that we view before we evaluate someone for corporate debt.
Yeah, definitely, Pratik. And for corporate debt, I would like to highlight one more thing. So since Pratik mentioned Vadva Group, I would like to draw an attention out here. We are the only platform which are able to bring the real estate corporate debt. So it's a plotted development. So we have carved a niche because our promoters background, and you have seen Naveen and Srinivas. So we have a rich experience of Vineet Saurabh that puts us in a unique position to source high quality real estate deals. So we had till now dealt three of them. One is of KNS, Other News, and Warburg Group. So these are secured by land. So there is a minimal project and construction risk. So these are plotted developers, which is if you are from the south, you would know the in the south people like to buy gold as well as the land. So you see, so we have done the plotted development. So this is one way. And as Prateek mentioned, what is what is it that we look for in a company? What is our credit assessment? So it's a very rigorous process. Till now, we have onboarded around 18 to 20 partners on our platform. And what we look at the partners is their entire financial diligence, how is the management, how is what is their scalability, what is their proof of concept. So like any lender would look at. Plus, our acceptance lead to platform generation. What I mean is the number of proposals we evaluate, which and the finally which get listed on a platform is less than 10%. So 90% of the companies which approach us may not come on the platform because of various reasons. It could be due to credit, it could be the pricing issue, it could be the tenor issue. So we try to curate the opportunities which is best suited for the individuals. So Giraffe is not a marketplace only, it's a managed marketplace where we manage the opportunities that are listed. And to manage it, we have a very rigorous credit process. Say, I being a head of investment, I evaluate the opportunities, and it's not just it's my personal decision. I can, if I like a company, and I bring it on the platform. So that would be a personal bias and my own bias because I'm sourcing the deals. So it's a conflict of interest that would come into being. So just like Prateek would bring a leasing or venture deal, he alone, he's not the decision maker. He does not have a say. So we have a credit committee which of 6 to 7 members. Uh, so the one who is being the sponsor will present it, and the committee will take a look at the pros and cons of the deal. They will discuss in detail. And once that entire process is run through, we have entire credit note, like in any lending institution you should have. Once that goes through, there's two, three checks, two, three stages. First, there's a in principle approval, then there's a credit approval. We have developed a credit model, which is internal credit model. We rate each and every company over that. We try to bring it to a scale where the opportunity lies, and accordingly we price it. Then there's a final approval, there is legal, there's structuring. So that's how we do it. So that's about corporate data, and that's common to all the opportunities on our platform. Now I'll touch upon the second product, which is invoice discounting, but it is nothing. It's a working capital solution to the company. Corporate debt is a more longer term, so a company needing a project finance or for a say capex or some business growth, that's where the corporate debt comes into being. It's more for a growth capital. Invoice discounting is more a working capital product, which is less than 1 year, and it is normally invoice discounting is 30 to 90 days. That's a sweet spot. So it's a form of working capital financing. It's also called supply chain financing. The underlying is the trade, and average tenor has been mentioned 66 days. I think it's for the platform. And the product yield one can expect from 8 to again 15% because these are short tenor. And the examples are 1K, Cal Pro. So these are the deals which almost come on daily basis on a platform. So there's a huge list of borrowers. One can go to our website and look at it. So Pratik, I'll hand over to you to take care of the leasing and the virtual debt part.
Yeah, maybe just on the supply chain part, I think what we do quite laboriously is to also understand where the money is being used. When someone says for working capital, we have to take pains to understand what is their trade cycle, what is the invoice being raised, what is the payables they have, and where are they using the money. That then builds the confidence that whether the money will come back in 60 to 90 days. Of course, we have different structures of security that we put together, but the utilization of money and where that is going, I think our team does a reasonable job of understanding that before it, of course, goes for approval to our internal process. Leasing, my favorite example to familiarize people with leasing is actually house renting. Effectively, a lot of us in India have stayed in rented houses, which just means that somebody owned an asset, put it on lease, and somebody is now paying rent to use that asset. Now, this is as true for a house as it is true for a matchbox, as it is true for a computer, as it is true for an aircraft. You own the asset, you lease it out to someone, the person or the entity that uses the asset pays a rent for it, which is called lease. The comfort here comes from that when someone is using that asset, he's generating or she's generating a return, which allows them to pay the lease or the rent of that asset, make a little money themselves, and grow. So effectively, if I rent out a car, somebody can use that car on an Uber platform, generate an yield, pay me my rent, and then still have enough so that their business might thrive and they can buy or they can take a second car on lease. That allows the businesses to grow. So where it really helps company is if you have to buy two cars, then you have to put up a large amount of capital upfront. If you take those two cars on lease, the capital requirement upfront is less. So your business can start, you can start making that profit and pay the amount back to purchase those two cars over a period of time. That is essentially the concept of leasing. This is actually widely prevalent in more developed markets where leasing happens for pretty much every hard asset or every large ticket asset that you see, whether that's aircraft, whether that's medical equipment, whether that's warehousing equipment. Of course, buildings are put out on lease quite frequently. So that is our philosophy on leasing, that we try and understand the asset, we try and understand the unit economics around it, and we try and understand that both the guy or the girl giving that asset on lease, whereas someone who's utilizing the asset, both should have unit economics to cover themselves up. The asset utilization should be to a level of 70-80%, which allows the money to come flow, and the cost of the asset can be recovered, making profit for everybody in the value chain. The second, of course, is venture debt. I'm sure all of you would have heard a fair bit about it in the media, where a lot of startups are raising capital and then are trying to raise debt alongside. I think the philosophy where this is slightly different from corporate debt is, in corporate debt, you can look at balance sheet and you can look at P&L and say, basis this profit, they'll be able to repay back debt. In startups, profit is missing. Those are mostly cash burning. So how can they absorb debt? The answer there is that we have to look at the unit economic of a startup. Why do most startups burn cash in their early years? The answer to that is they have identified businesses which are inherently profitable or which will become profitable at a particular scale. Sorry. And they have raised equity money or debt money to reach that point. So that money, whether that's venture debt or equity, is going for their growth. So the two or three things that we look at it very carefully, apart from the skill of the management and expertise and the area in which they're operating, is whether the unit economics of that startup makes sense, whether they are actually using the money to go in areas which can fuel growth and is not straight cash burn. The easiest example is if you have to sell, let's say, a lamp, you can give a 20 rupee discount and sell it. But that 20 rupee discount will then attract sale, which is not going for growth. But yes, if you can sell a lamp online and effectively you are needing money to access that feature online, or you want to put up two lamps online, that's why you need that money, then that's the justification for growth. And then whether you take it through equity or venture debt, that's separate. Why entrepreneurs prefer venture debt is because they believe this is non-dilutive. Effectively, even if there are something called warrants or convertibles with it, that only dilutes a small part. But equity is precious. Shareholding in a firm is precious to them. So they said that, look, part of the money for growth we will raise as equity and part of the money we'll raise as debt. And as we grow big, we can then become much more like a mature corporate and then continue to take large volumes of debt to make their business more streamlined. The second thing that, of course, we see in venture debt is the scalability of the business and their track record. Whether 12 months they have done that performance in a demonstrable way, whether that's sustainable, whether that's scalable. If all of that holds true, that sort of then brings us to believe that the company is growing in the right manner and they can pay back that debt on time. Vikas, if I've missed anything.
No, Prateek, it was pretty comprehensive. Just in a simple terms, venture debt is nothing. It's a debt to the startup. or the venture capital funded. So it's a form of corporate debt is to more mature companies. And since the startups find it slightly difficult on their initial stage to raise debt, that's why the fancy name venture debt. So I think we have already paused 30 minutes. So
I think there is one question and several people have raised hand. For people who are raising hands, my request to you is if you can type your questions in the Q&A box, then Vikas and I can take it up. Anybody having questions, please feel free to type it in the Q&A box and we'll be happy to take up.
yeah, we'll wait for a couple of minutes and so allow you to type in your questions and then we can take it forward.
I think the first question that we have is risk mitigation for venture debt. I think there the answer is that this is also done through debentures. We used NCDs typically for venture debt. So you would have 1x cover of a security, which might be receivables, which might be anything else that we might have. But in a startup, I would believe that that is always at risk. Your essential security is coming from the belief in the business that that is scalable and unit economic positive. While the security cover might have receivables, we might take a personal guarantee, we might take even security checks. Those are all good to have. In bad times, if a startup is going down, the real value or the real security might not come from those instruments that we might have. So in any credit evaluation, the credit comfort is essentially coming from our assessment and from your belief, if you are choose to participate in the unit economic of that business, in whether they have adequate runway and whether they have performed enough so that they can sustain that and pay back that debt.
Yeah, so great. So another question is there from Mr. Shishra. Hi, is it Giraffe certified with threads of RBI? So just to answer it, Threads is an alternate platform which has been provided by RBI for both the anchor and the vendor to raise the funds. So we are the facilitator of invoice discounting. So we are not required to be registered with Threads. So on Threads, only those parties can register for directly raising the money. Manjunath is asking one question. So I'll read out the question. So whatever is relevant to you, take your answer. Whatever is relevant to you, I'll answer.
Sure.
So this one is for you. Why in your platform? Because it's a strategy one. Why in your platform minimum amount fixed around is rupees 1 lakh? There are other platforms where minimum amount is 10,000.
I think when we began Giraffe, our essential understanding was that, look, these products are still new for the Indian ecosystem. So we wanted to fix an amount where people would take time before investing, where they will go through the material. The amount has to be material enough for them to take some amount of their time and understand where they are putting money. The risk we find with small ticket sizes with 5,000, 10,000 is people sometimes don't understand the risk that they're taking. We want our customers to be aware. We want our customers to read. We want our customers to understand the risk that they're taking. Hopefully, over time, as the products mature and as we bring safer and safer products, we can also reduce this 1 lakh to lower amounts. At the moment, we continue to hold this 1 lakh simply because we think it's a good enough barrier for people to then invest some time and energy into understanding where they are participating.
And just to add what Prateek is saying, and just to address your query, if we find an opportunity which is credit worthy, which has no risk, I think for that we'll have a lower limit. I hope you get the reference.
Yeah.
Prateek.
Yeah.
Yeah. So another one, I'll put it to you. Again, it's a strategy question. Can you put pipeline deals also on platform? So why are you not showcasing your pipeline on the platform? This is the question.
That's an easy answer. We encounter several proposals on a day-to-day basis to take debt. While we don't do our own work, while we are not comfortable putting it up and putting our money in, we will not put it up onto the platform. It'll be wrong of us to put up our pipeline when we have not done adequate work on it before putting it onto the platform.
Okay. Another question is from how can I access the live deals?
That's an easy answer. Please log on to www.giraffe.com. If you are a registered member, once you have completed your KYC, all opportunities would be visible to you. You can participate in them. If you have not registered, we request you to register, and you'll be able to see all the opportunities that are there on the platform. You can also
Okay.
see all opportunities that we have done in the past. So in case you want to go through that track record, please do. We invite you to do so. You'll be able to do it through a very simple online login process.
Another one is Giraffe registered with SEBI or RBI?
So on this, at the moment, there are no regulations either from SEBI or RBI governing fintech platforms like us. We hope that in due course, those regulations do come out, and then we'll be very happy to register with SEBI or RBI. The instruments that we use, which are mostly non-convertible debentures, follow guidelines as prescribed by the Companies Act and SEBI. So those are all processes that we do follow. There are now some guiding papers that SEBI has published. So most of our processes are actually in line with that, but we'll have to wait till either SEBI or RBI or the government sort of issues more compliance and more license that we need to take in case they do so for our operations.
Okay. Another one is revenue-based financing as a product also available on Giraffe?
At the moment, no. Hopefully, it will be available soon enough. Again, revenue-based finance is one way of venture debt, where effectively your repayments are linked to the revenue a company makes. So from a credit analysis, venture debt is quite akin to RBF. But if you say that, look, I want a specific repayment linked to the revenue of a company, is that available on Giraffe? At the moment, the answer is no. Of course, when we find a suitable opportunity, you will see that on the platform.
Yogesh Sharma has asked one question. Are venture debt securities tradable in secondary market, though through listed exchanges or through private transactions?
Actually, none of the securities that are issued are as liquid in India as in some of the developed markets. Now, can you sell a debenture? The answer to that is yes. Can you find a buyer online? Can you find it through an exchange? Can you find it in a private placement market? It depends where the buyer is. Most of these are unlisted papers, so it will have to go through an off-market process, but it depends whether you can find a buyer for it. And unfortunately, debt markets in India, especially the private debt markets in India, are not very liquid. So if you are participating, please go in with a mindset that you might have to hold it till maturity.
Okay. So just to give a short answer of it, yes, they are tradable, but whether on exchange they can be traded, if it's not listed, no, it can be sold in private market like we are doing, so that can be done. Can you tell how many times the default happened in all the opportunities you have presented so far?
The answer to that is we have had no defaults or delays for all the opportunities that have been listed on Giraffe so far.
Who will initiate for opportunities, Giraffe or borrowers?
I think it's a mix both. We, of course, get inbound queries from people who are asking for money. And as anyone would, most of those opportunities are the ones where we are very cautious and we have to do a little more extra diligence. We have a team headed by Vikas of about 8 people who continuously go into the market and then find good opportunities for the platform. So it's a mix of both inbound and outbound effort.
And can you have product which will have fixed returns on monthly basis, Ravindra?
Yes, we have several of them. You will find that all our NCDs typically have a monthly amortizing structure. So you will have plenty of products which will give you monthly returns, and then you can take them up. Leasing also will have monthly returns. So we'll have plenty of products where there are monthly payouts.
So another question, important one is, so there are 3 questions which are being asked repeatedly. So I'll just summarize them that others don't have to type in those same questions. One is, what are the risks in this product? We'll cover it. Second, what is the tax treatment? And third, which is another most important question, what is the skin in the game for Giraffe? So another way of putting it, what % of investment does Giraffe invest in pitching the product recommended by it?
I think let me start with the last one, which is a critical one. For any product that is less than 12 months, we believe after we have done adequate diligence, we don't subscribe it, but investors on our platform directly participate. We now have a rich enough track record history that you can go through, and we hope that you'll feel comfortable with it. Most of the 210 crores that has been returned is because of the short-term money on the supply chain financing deals that we have done. For any deal that is Sorry, go
Just a
ahead.
class, sorry. So just one exception to it. So I'll rather put it in invoice discounting is something which gets sold out very fast and we don't have to put our capital behind. So in case of commercial paper or other product that we are bringing which are less than 12 months, there we buy it on a balance sheet, we underwrite the risk, then we are putting on our platform. If an investor likes it, he can participate. Otherwise, we have bought it on our book, we have taken the risk and we are holding that paper. And if it does not get sold, we'll hold till maturity. So that's
And
the answer.
And that's same true for anything that is greater than 12 months, specifically NCDs. If our team has gone through the paper, if we are comfortable with the risk, we actually subscribe it with our own money upfront. And then when investors subscribe it onto the platform, we downsell that particular debenture to them through an off-market transaction. But in case you don't subscribe it, in case that is not subscribed, we will continue to hold that on our balance sheet because we are comfortable with that risk. We hope actually that in 1 year of time, we will have an NBFC license, which will allow us then to participate in each deal that we put up onto the platform and can hold some part of that risk onto our books, sort of giving a little more confidence to folks on the platform saying we have skin in the game.
Great. So now the simple ones that I can take up. So what is the difference between corporate debt and bond? And so bond is a sub-classification of corporate debt. Corporate debt has many products. It's a loans, it's a, NCD, it's a bond, it's a commercial paper, it's a market-linked debenture. So bond is a instrument or a classification of corporate debt. And I think you have, I think there's an important announcement which Pratik has put up. He has changed his slide. Something about refer. You want to take it, Pratik?
Yeah, a small plug for Giraffe, which is effectively saying in case you have liked or you have tried Giraffe and you would like to recommend it, we have a refer and earn program where you can refer someone. And if they participate on our platform, then we have a small reward for both the referrer as well as the participant. The steps are on your screen. So we hope that you would like that initiative. It's our way of just recognizing people who want to spread the word about Giraffe.
Okay, so I'll just rush through the questions because it's a long queue. I'm taking in a random
I
order.
think we missed a tax one, which
Yes,
I will.
tax and risk are the ones which has asked many questions. So uh, I'll just summarize the questions for all those questions get answered in one go. What are the tax implications on different products? And will you deduct TDS before maturity? Is it linked to DMAT? And yeah, so let's
So
go.
three parts to it. Most of our debenture opportunities you will be able to see in your DMAT accounts. We now actually insist with our borrowers that all debentures have to be dematted so that the investors on our platform can actually see those debentures in their DMAT account. Second question, what is the tax treatment? For all debt products, the tax is subject to your tax slab. You will have to pay tax. To the TDS part, that is a little more opportunity specific. In any opportunity in the FAQ section, you will find it clearly mentioned whether TDS is deducted on that particular opportunity or not. But that information is made available for each opportunity in the FAQ section. I hope that clarifies the tax part.
So just in a nutshell, if I were to give an answer on the NCDs part, for in NCDs, if it's a public issue, it is not, there's no TDS deducted. If it's not a public issue, TDS is deducted, which is 10% on the interest. So that will be reflected in your 26 AS. In case of commercial paper, no TDS is deducted because it's on discounting. So as Prateek mentioned, each of the opportunity is different and the tax treatment is different. So I would urge each one of you, whenever you are investing in any opportunity, even so, even amongst the product, I'm telling you, even if it's invoice discounting, the TDS portion could be different the way it is structured. Even in case of a corporate bond, whether it's an NCD, the tax treatment could be different. So I would urge you, and if you have any queries on any clarification you have, you can write it to us on support@giraffe.com, and we have a number also. And if you're in Bangalore, as Pratik mentioned, we are not only in virtual space. You can come down to our office and we'll be more than happy to host you. So I think that answers most of the tax queries. And Pratik, another one is the risk profile across each category, and I'll just club the questions for you.
Sure.
Uh, what is the risk involved in each of the type? Uh, Another one is I want to return around 12% every month, being senior citizen, having no work but money. That's a good thing to be in, sir. Uh, there is an and there uh, my equal opportunity do you accept payment from back end? Uh, this is not risk.
Let's maybe take up the
One
risk
more, one
part.
more. It's a Nagendra question is also there. I am sorry I spelled your name wrong. It's a Chandrasekhar, I'll put it. Is corporate debt is the most safest return? So these are the few questions which has come up.
I think, look, the simple reality is that there is no return without risk. So higher return goes, one should always assume that the risk parameter is also going higher. We have products from 8% to 20%. We have underlying securities for that. We'll be very happy to explain to you as to what is the underlying risk and have a conversation on that. The simple answer is that we cater to products which are across the risk and yield spectrum. It depends on your appetite where you would like to participate. If you like the 12% one and are happy with the triple B rated product, or are happy with the, let's say, a hard asset collateralized product where land is the underlying asset, then that's the one that you would like. If you want like to participate in rated papers, we have commercial paper rated at A1. You can participate in that. To the second level, which is whether corporate bonds are the safest, the answer to there is no. No product is safe. There is always an underlying risk. It's only a question of how much risk is there. India and globally, there have been several corporate bonds that have also gone bust. The safest, of course, is to put your money in a government bond or go to Government of India, but that also has its own risk. So there is no reward without risk. Please assess that, and we'll be happy to walk you through that.
So just to answer, product risk are only a part of it. The majority of the risk depends on the counterparty whom you have given the money. So, and tenor plays an important part. So there are three main variables one should look at before investing. First thing is the counterparty. How credit worthy is the counterparty? Okay, so you can go through the product note that we have on our website. If you have any questions about the counterparty, you should ask us. And you should do your own due diligence as you do in terms of equity or putting your money in any of the financial product. So counterparty is the credit risk. Second one is the product risk. So product is, you can see, as the tenor increases, the product risk increases in general, but it might happen if you're giving as to government of India, even if you give for 10 years, government India can print the money and give you back. So it's a combination of the counterparty and the product. Third thing is, as Pratik said, the guiding line is the interest rate. So the higher the interest rate is, the higher the risk would be. So if it's a credit-worthy market, it's a, say, government of India will raise it at 6%, Tata and Reliances of the world will raise at 7%. So you should look at with the same lens. Okay. So I think we have adequately covered the risk part. Mihir is asking how much time does it take for a company to raise corporate or venture debt with Giraffe? So Mihir, Pratik answered it somewhere in his when he was giving the presentation. It takes around 2.5 to 3 months at least for us to go through a due diligence. We do a very thorough due diligence. We should be a comfortable party. And somewhere I'll just add on and answer another question. Somewhere has asked, someone has asked, why do you have same set of opportunities or counterparties coming on your platform? Why don't you bring more? So the idea is we, as we have mentioned, we cherry pick the counterparties, and one of the most important criteria is those companies should be of certain size and they should be scalable. And so uh, I think that's answered it. And we keep adding more and more opportunity. Every month we add 2 or 3 borrowers as we find them credit worthy. So rather than uh, uh, in the name of diversification, bringing you all sorts of opportunities, our philosophy is rather we should stick with the couple of parties who are credit worthy rather than entire approach. And I think we have almost 18 to 20 counterparties, and that's a fairly good diversification if you put across those.
I'll just add maybe 2 points there, where the number of borrowers is a slowly expanding set because it takes us about 2 to 3 months. But the idea for us always for us has been that if there is an opportunity, we should have about 30 to 40 crore of exposure with them. But we like to begin small. We like to begin with 2 to 5 crore kind of an opportunity, monitor their performance, monitor their repayment, understand their business. And as we grow more comfortable with them, as we see their business also perform on the metrics that we presumed, then we are able to do more and more business with them. And that is why you would see a fair amount of repeat deals from the same borrowers coming onto our platform, because there is more and more underlying comfort on their business.
Yeah, Mr. Sushil is asking, I want return of 12%. I'm senior citizen and having no work but money.
I think
So,
Mr. Sushil will get someone from our team to actually reach out, because
yeah,
while we have opportunities in the 12% bracket, it will be important for us to understand what kind of risk you are comfortable with. So we'll maybe someone from our team will reach out to you and have a discussion around this.
I would request you to mail us and put your credentials and the contact number. Our team will reach out to you and explain the risk and whatever you're comfortable with, because 12% is a decent number, and accordingly, we need to assess your risk appetite as well. So, another some strategic questions. There is an overlap in equity investors of Giraffe and issuers on Giraffe. What are the additional credit checks in this case?
Any opportunity on Giraffe, whether that is brought in by an equity investor or anybody else, has to go through the same process. Now, it depends on the opportunity itself, whether it needs additional credit checks, whether it needs a sector expert, whether it needs some deeper understanding. To also assure you, all the equity investors in Giraffe have minimal stakes. So none of them can actually command us to say that, look, no, these are opportunities that you can do. That cannot be the case, and that will not be the case. And each opportunity is assessed on its own merit and has to go through our investment committee process.
And just to add to it, the numbers of selected opportunity you see from the same set of equity investment, I think 9 times more have been rejected. As we said, our acceptance ratio is less than 10% for any deal getting on our platform. So rest assured, if you see one deal from an equity investor, 9 from the same equity investor would have been rejected. I see all opportunity messages are not getting received via WhatsApp. Ticket was raised for same, however, still suffering. So, Mr. Sandeep, we will definitely take this feedback and like to improve our services. We'll look into it. What is the issue?
I think, Mr. Sandeep, what you should also look out for is emails. You would see that emails for all opportunities are actually much more reliable. So please keep an eye for them.
And at times they go into junk folder. So you might like to put it into safe so that you can receive it. So I think for email, we get sent every time. In a WhatsApp, at times it happens. It's we take opportunities at odd hours. So that's why we do not want to disturb you. Maybe that's why you've missed it.
I think actually WhatsApp also has a process where if you upload a template, it takes a certain time for it to get approved. So that's why it gets sometimes delayed. But the emails are out whenever an opportunity goes live. So it's better to keep an eye out for them.
So there's another question: when we invest our money via Giraffe, does securities get credited in Demat account? So, sir, it depends on opportunity to opportunity basis. If it's a bonds, commercial papers, venture debt. So, if it's in a form of NCD, yes, it gets credited to your Demat account. So, it's also mentioned in FAQs, and we mention it very clearly where will you see the security. Any new product Giraffe is initiating? Yes, Mr. Lohit, our endeavor is to launch one product on at least one product on monthly basis. We have launched venture debt, we have launched commercial paper, we have launched market linked debentures. So yes, we are in the pipeline, and it's you would appreciate it's a tough job. And I think next week, if everything goes okay, we will be definitely will be bringing one of its type of product on our platform, and I hope so.
We can't share all the products that we are working on because it will be too early to commit. But be rest assured that there is a host of products that our team are working on in terms of new products that we can make available to our customers. We'll keep you posted on the same.
So 2 questions. Why don't we have a Giraffe mobile app?
The answer to that is we also want to have an app. Our tech team is busy building one, but it's a process, and it is still about 4 to 5 months away. hope we'll keep our customers posted on that. When we, of course, started Giraffe, the idea was that, look, we don't want an app for fixed income because there is no real engagement unless we plug you with news, and we don't want any other notifications disturbing you on your mobile. But now we have got a fair amount of feedback that people find the app really convenient. So we are actually in the process of building one.
Yep, and Mr. Rohit asking where is your office in Bangalore? I would like to visit personally. So our office is at HMG Ambassador Road, 12th floor, and you can schedule a time to meet us. And our contact details are available on our website. And Mr. Verishuran, I'm sorry if I've pronounced it correctly. Between the time we invest funds and at the time security gets credited, how much time it takes T+2 or T+3? Even this is mentioned. It normally gets credited in T+1, but on you should, because it can be, say you have traded on the Thursday, say if you have traded on Friday and Saturday, Sunday, Mondays and off, it's a public holiday, so it might get on T+4. So what we mentioned is T+5, and within T+5 you should get it. But our endeavor is to transfer the securities ASAP. So where does the money lie? Do you have an escrow arrangement? Yes, we have an escrow arrangement with the bank, ICICI and Yes Bank. That's where the money lies. Can Giraffe team invest in opportunities? Yes, Lohit, it's a equal opportunity space. We also do put our money into the platform, and I very good you have asked this question, and somewhere the person asked what the skin does the Giraffe have in the opportunities. Though we are not officially mandated to put any money, but we like our opportunities, our team like our opportunities, and we do not want to stop them. They do not get any preferential treatment, let me tell you. They also have to participate through the website at the same rate. So yes, and I can say for sure, out of every counterparty which has been on our platform, at least one member of the top management or the team has invested. So that's the conviction we have in our opportunities, and I'm very proud to say it.
Yeah, most of the senior team are actually regular investors on the platform and are reasonably happy to participate in most of the opportunities that go by.
So I don't want to we don't want to miss on to the problem we are solving. We are saying that the people don't get an opportunity to invest in high credit when we are presenting something to solve a problem. I think it's fair for us to be allowed to participate.
As an anecdote, actually, that's how Giraffe started. When few of us were talking about where do we put our own money, and then we encountered the same problem that there are not any other avenues apart from public markets where you can put your money for wealth creation. So now that we are solving that problem, we are very happy to participate.
Mr. Shishra, you have retyped your question, and I think is Giraffe certified with TREDS or RBI? So I've already answered. It's a second question which I took. So TREDS is a platform on which someone who is trying to raise money to invest discount that can only register, not a facilitator. So TREDS is a facilitator like Giraffe, and TREDS is a facilitator which is by RBI. Similarly, we are a facilitator where the borrowers can raise money. So we cannot and we are not required to get certified with TREDS. Mr. Vinay is asking, I have few doubts to raise. So sir, you can type it in the Q&A box. As you have typed this message, we'll be happy to take it. Prabhakar is saying, I have faced timeout issues in both investment I made. Amount got debited, but transaction was not processed. I had to raise tickets on mails for resolution. If you can please check this, Prabhakar, I'm really sorry and apologize for the inconvenience caused to you. Prateek, we will have to look this seriously why we are losing out on a prospective investor, and you want to take it forward.
I think we had a little bit of a hiccup with our payment gateway where the number of timeouts for our API calls had increased. So that is a problem that we are actively working with our payment gateway providers to solve. Our tech team has, I think, resolved it as of yesterday. So those kind of instances should go down. But we, of course, apologize. And I hope that problem is rectified. In case not, please do write to us and we'll make sure that it is.
So, Mr. Bhaskar Singh, I'm nearly a senior citizen. As of now, where should I invest in minimum risk? Is it invoice discounting or something else? So, sir, Warren Buffett is 93, and I don't. So his age has to do something with the risk appetite. Having said that, invoice discounting, as I said, may not be. It's a shortest tenor. I'm repeating, it's a shortest tenor. It does not mean it's the most safest deal. It depends on the counterparty. So you should talk to us. You can share your number with our team on support. We'll get back to you to understand your risk profile. Then only we can tell you, so this is what you can do. And I would like you to take help of your certified planner and then decide what's the risk profile and what. And it also depends, when do you need money? Do you want regular money for your expenses, or you want additional capital, or it's a wealth creation? So what is the purpose that you are putting in your money for? So that's all needs to be evaluated. That would be the function of the product, rather than me giving you a simple pill. Okay, no, invest this one is the safest, you put it in our money. And I would urge you to diversify across opportunities and across products. That's have been our mantra. That is why we bring you a lot of opportunities, and try the diversification should is good. Uh,
I think Mr. Yogesh has asked, when do we expect
HDF,
HDFC Bank to become smooth again? The answer to that, Mr. Yogesh, is actually we've managed to bring back HDFC through our payment gateway this week. We are still a little bit in the testing phase, but there will be an opportunity that will go live today, and HDFC should be available for it. So we hope when you try it the next time, you will find HDFC as an option.
Mr. Rohit Singh, can you share the recording of the current webinar, Mr. Rohit? So all the webinars are available on the YouTube, and our team will upload it, this webinar. And I think we put it out in the public domain, Prateek.
Sorry, Vikas, I didn't catch that.
So he's asking where would be the recording of this webinar be available?
I think we'll also send the link across to you in an email. Of course, as Vikas said, that's available on our YouTube channel, but we'll also share across the recording link over an email.
So Prabhakar is saying, can we not have CPs opportunity under 1 lakh, like inward discounting? Prabhakar, I'm really sorry, you'll have to take up this RBI, because RBI has mandated you cannot have a CP below 5 lakh of value. So this is the constraint. Even we feel it, but that's how the market is. So just to give you an example, like a market linked debenture cannot be less than 10 lakh. And I personally like that product a lot. But that's the rail guards which the regulator has put in, and we have to follow them. Ashwin, we have already answered this question. Can we have recording of this session? Prateek has answered. I think three questions left, and I think these were the fourth one came. I think these are the last 4 questions that we will be taking.
Yeah, I think we've crossed 12, so maybe
12,
last
yes.
2 or 3 questions that we have to do.
I don't want to keep Prateek, who is newly married, from and on a Saturday morning.
No, always a pleasure to, of course, ask customer questions, but time is precious. So please feel free to anyways raise your questions to us via support, or whether by contacting Team Giraffe. We'll be happy to answer them. Yeah. I think Vikas's screen is frozen. So let me take up the next question, which is from Mr. Chandrasekhar, that considering that Giraffe being a professional in this market and has done their due diligence for all the opportunities listed, can it be said that it is 99.9% secure and most of the risk has been mitigated? I would reiterate that no matter the amount of work we do, the only security that we have is that it has gone through a process which is reasonable, which is robust. It will still not be 99%.
And 99.9% secure.
No product is safe.
I don't think so.
There is some returns. Having said that, it will not go bust for something that was obvious and not got picked up. So our endeavor there is that while we'll continue to do our work, while they should be more secure than the market, but each of the products do carry risk.
And Narendra, just for an extension of it, we are the professionals, and however, they are professionals like banks, mutual funds, insurance companies, which has lent to the companies like ILFS, Diwan Housing. They even, despite of the credit, Yes Bank, despite of the lot of credit due diligence, the companies went bust. And so, as I love to say, credit is a part of two functions: is the intention and the ability. We can measure an ability to an extent, but intention is something we cannot measure. That's a past track record. And so you'll have to. So I would like to say nothing in life is 99.9% secure, except maybe the gold purity. We can be rest assured. How do you check the borrower's credibility, and what assurance can you get back for the amount invested? So Vinay, you'll have to read through the product. So each product is structured in a manner. We try to detail it. There's no assurance. these are credit products. There's no guarantee that Giraffe is providing. So these are security. Uh, so like you have an equity, you participate in equity. If the company does well, your money gets returned, and you can make an extra normal return. In case of bond, whatever assumptions that are there, and if you see the company is doing well, so they would return your money. We do take security in cases wherever it's feasible, and we try to make it as secure as possible. So if the company goes bust, we have the recourse on the company, and that but that will have to go through the legal process, and you know the Indian uh, court system, how much time it takes to recover, and the recovery could be any amount 10 to 50%. So those things you will have to keep in mind. These
I think
are
just to
financial
add
products.
on borrowers' credibility, please do read our product notes. That gives a fair insight into the work that we have done and what are the key numbers or the key business metric that you should look at before you participate in an opportunity. So that will give you some sense of how you should assess each of the product, how you should assess a borrower's credibility, and what are the underlying risks before you participate. So we do encourage you to please go through the product notes before you participate in an opportunity.
As SEBI says, सोच कर समझ कर invest कर. I think it's a mutual fund line. So सोच कर समझ के invest कर. I would reiterate it. You should read. That is why our mantra is 1 lakh rupees. So you should read. There is no hurry. You should not have sleepless nights over the returns. Even if you earn 10-15% lesser, but you should not lose sleep. If you are not comfortable with any opportunity, I would urge you not to put in money. First, read it. And our mantra is very long term. We want you to make you financially literate, to earn the risk and returns, then invest in it. There's no hurry. We are here, you are there. So time is enough. And you would like to read a book called Psychology of Money that would change your relationship with the money as it did for me. Just an extra information. I don't know whether this was needed or not. So another one, can I invest more than one instrument exceeding 5 lakh? Yes, sir. You are free to invest any amount, but we would like you to diversify. Uh, what is the employment opportunity at Giraffe? Is it full-time, part-time? Sandeep, you can write it to us. So we don't have part-time, we have full-time. We will be happy to evaluate. Do all
I
the
think
deals
because let's
happen
just take
sales?
up two more questions. We are, I think, short on time, and the questions are
Sure.
coming in thick and fast still.
Yeah. Uh, I'll take it till 12:06. There are three questions only. Do all the deals have the same cycle as in Giraffe subscribing the security and them selling on the marketplace? Pratik, this is for
I
you.
think, as we said, any short-term opportunities, barring commercial paper, that does not go through the process of us actually subscribing. That is directly offered to the investors on the platform. Commercial paper and any opportunity that is greater than 12 months goes through the same process, which is we subscribe in the primary offering, and then that is downsold to investors on the platform.
So Vinay is asking some questions. I'll just read it. Since one of the client added for raising fund in your portal is one of my competitor in my business, I checked their market is not running good and not a good company as work nature. So Vinay, it will be helpful if you can provide us feedback. We'll be happy to answer since it's a competitor in your business. So we will like to look at it objectively, and your feedback will be very important to us. What percentage of portfolio startups, sir? You can look for it. We have opportunities ranging from the Naveen Group, Home Credit, it'll be. So we have a fairly large mature companies also. So you can go to our website and all the past
Also,
deals are listed. So you can evaluate
startups
for
is now a
yourself.
word that
I
is
don't think it will be a fairly good mix. It's not that we are skewed towards startups. There is a Calpro which is 30 years old. Carry on, carry on.
I think startups is also a word that is slightly misused now because you have unicorns, which are also called startups, and fairly young companies that are also called startups. So we would also like to clarify that in our definition, company which have reasonable scale, we like to view them as corporate debt effectively, while the newsmakers or the news headline hunters might call them startups.
Okay. I think we have already exceeded our time, and we thank all our uh, audiences to join in and make it a successful webinar. And I hope it has been an informative session as well as it was for us. We look forward to have such sessions regularly, and at least a month we do it. Thanks, and Pratik, you want to say
Thank you.
something?
Thank you all for finding the time on a Saturday morning to listen to us and for all your questions. Again, a plug, please look at our Refer and Earn program. And in case you find anyone you want to speak to about Giraffe, please do use your Refer and Earn codes. In case you have any questions pending from this session, please write back to us at support@giraffe.com, or please reach out to us or to anybody in the Giraffe team. We'll be very happy to take your questions. And we look forward to seeing you on more of our webinars where we'll walk you through some of the other aspects of about investing in fixed income.